So we've talked about the ugly. Now we go in reverse, and now we're going to talk about the bad. So, Marcia, I'll start with you this time. What is that bad?
Oh my gosh. The bad is the taxes. And the reason the reason the taxes are bad is because when you as the business owner are presenting your taxes to the government, you want to take every opportunity to not pay taxes, right? You know, we're looking for tax strategies, we're looking for ways that we can cut it off and just pay the least amount of taxes. So that's why we call it the bad.
Nobody ever signs up to pay more taxes.
Right? We want to pay our fair share.
Yeah, and the tax code is written to make you look your worst. You can fully depreciate a product in 1 year. You can completely write things off that on your financials you wouldn't do that. And what this does is it drives your income down and it encourages you to buy equipment and it does all of the positive things the government wants you to do. And taxes are a income device, but they're also an economic driver device. If you think about why depreciation, so you buy more equipment. I'm sitting upstairs right now thinking about buying a new computer and a new phone to get those deductions into this year because I can afford to do that right now. So when you talk about your taxes, you look at how fast I can depreciate things. How can I carry forward old debt? Can I do all of these problems? What do I do to write off things to make it look its worse? And what you have a very, very simple balance sheet in your taxes. And it doesn't do a great job of explaining your equity. It doesn't do a great job of explaining anything. But taxes are written for one reason, right?
Yes, agreed. So the reason that we all got into business for is to be able to write off our regular expenses. So as business owners, we want to take these deductions that are afforded to us by the government. They want us to encourage us to spend in the economy, to create jobs, to buy and innovate. And so they give us these deductions. And so as business owners, that's the real key. If you're a W-2 employee, you get no write-offs. You get a standard deduction, you get your house and taxes, and that's it. So by being a business owner, you get to take those deductions, and you want to take those deductions. And the reason we call this the bad is because it's going to make your business look in the worst possible manner because we've deducted everything we can possibly take out of that legally. We're not doing things wrong. We're doing things by the tax code. And that's a huge advantage for us as business owners to innovate and to put investment back into the economy and into our business.
If you're growing your business, you've got a growing business, and I looked at a client the other day that they've doubled the business over 1 year.
Awesome.
But their EBITDA, which is what everybody measures a company's growth on, sucks.
EBITDA is earnings before
depreciation, income, taxes, and amortization.
Okay, that's a big word. It's a big acronym.
Yeah, but it's something that people use to measure a business. But they've done this growth. They went from 10 million to 22 million.
Nice.
Without borrowing any more money, they've done it all organically. Because they've done it organically, their taxes are going to look terrible. They've invested so much money back into the business. And that business, that's why they do that. It's encouraging you to use your own money, to put back into the business. That's what the tax code is set to do, to encourage you to invest in your company and invest in your
terrible or bad, and why we call this the bad, in the eyes of the IRS or in the eyes of who's seeing it. It's not like it's a bad thing.
No, it's more the numbers.
Looking, right?
It's more the bad numbers. So we're talking in financials, it's all about the numbers. And when your numbers are being used, it's to showcase something or another. In the general ledger, we're just documenting everything. In the taxes, we're trying to make the end number, the part that you pay taxes on, the lowest possible.
But don't get so hung up that you drive yourself to no tax.
Right, you have to pay some.
Because what happens if you don't have any taxable income year after year after year? Everybody says, well, you don't make any money, you don't know how to run your business, you're not doing these things. Mm-hmm. And what they're going to do to offset that is, well, you need to borrow money, we're going to charge you a higher interest rate. We're going to charge you tougher terms where maybe we would have given you 5-year terms at a low interest rate. If you'd made money, we're going to give you 3-year terms at a higher interest rate. So you have to pay some taxes, but you manage, you are managing this to look as positive, possibly bad as possible.
That's right.
And because you want to have a little tax code. And I mean,
and you want to show that your growth. So if you pay taxes on, let's just round numbers, 100,000 last year, and next year you want to pay taxes on 150,000. So you show that you're growing, but you still want to take advantage of every opportunity possible and available for you, right?
yes, and that income line, to me the standard is a business ought to be making 3 to 7% of their gross income to their taxable income. And if you're in that range, nobody's going to worry about it. If you're at a negative number, that's a problem. And if you're at a really big number, 10, 15%, which I've seen, why are you there? You're obviously making too much money, or you've done something right. Why aren't you reinvesting that money into things that would give you tax savings? And that's the thing of, I've gotten to where I'm making 15%. I need to be reinvesting money.
Yes. It's the economy. It's what the government supports business owners, which is the hugest market. The small business owner, the mid-sized business owner, we're not Google, we're not talking about Costco, we're not talking about the big guys. We're talking about the everyday business owners taking advantage of what's available to them so they can reinvest into the economy. And that's why you want to make it look bad.
A small business is still considered anybody with less than 250 employees. And if you use the threshold of 250 employees, that's 80% of the businesses in the United States. And of that 80%, half of them are below 40 employees. So when you talk about small business, these are businesses that are their lifestyle businesses. Their mom and dad, they're doing their job. They're not paying as close attention to their accounting as they should, and they don't understand this piece because it'll make it easier for them to grow if they understand it and follow it.
Seek out the professionals, absolutely.
Absolutely. It's like my great-grandfather always said, pay the professionals. So the professionals that we have here, these are the ones you want to connect with. So it's a phrase that I've always stood by as a young business owner and just in general. Always pay the professionals, whether it's a mechanic, whether it's the financial advisor, always pay the professionals. So
they spend their whole life doing this one thing.